In 1997, the UK Chancellor of the Exchequer decided to launch sweeping reforms of the financial industry. He took power away from the Bank of England and transferred it to a watchdog, the Financial Services Authority. 3 years later, the FSA was granted statutory powers. Today, the Chancellor George Osborne is giving the power back to the Bank of England. Some people say the move is overdue, and others say the timing couldn't be worse. Here with us today on INSEAD Knowledge is a man that has been at the centre of FSA activities since 2004. Thomas Huertas, thank you for being with us here on INSEAD Knowledge.
Thank you very much. It's a delight to be here.
What is wrong with the FSA that it's being dismantled? Mervyn King, the Governor of the Bank of England, testified to Parliament that the bank's CEs told him that the level of FSA staff was too junior. What might have been done differently in order to prevent the bank failures and meltdown?
In terms of what is wrong with the FSA, that is, in my view, a much broader question of what is wrong with regulation. And if one looks back at the crisis, it is true that regulation did not foresee the crisis. The regulation did not, and supervision did not take measures to prevent banks from creating positions that fell apart during the crisis. But I would submit neither did anyone else foresee the crisis. In the case of the UK, what we confronted when Northern Rock ran into difficulty were two glaring shortcomings in the regulatory framework. The first was with our deposit guarantee scheme that only insured the first £2,000 of a depositor's money to 100%, and was unable to pay out the insured deposits rapidly. The second problem was that we did not have a resolution scheme for banks. Banks were subject to resolution under the normal corporate bankruptcy proceedings, and that turned out to be very inappropriate for banks. And we've corrected both of those shortcomings.
How could bank failures be handled less disruptively in the future?
We have to find a way in which banks can be made safe to fail. And we're working on that through things such as an introduction of living wills, through measures such as a bail-in approach that would convert forms of investor capital, such as preferred stock and subordinated debt, and possibly long-term senior debt, into equity capital if the bank runs out of the ability to finance itself in the private markets. What we're trying to do is create a mechanism that banks can fail in the same way that non-financial business corporations fail, that there is a bankruptcy procedure that allows a bank to fail, its capital to be restructured, while it continues in operation and continues to serve customers and, above all, depositors. If we can't solve it, then it has, in my opinion, very wide-sweeping implications for the type of banks and the type of banking structure that we will have. It's just simply not acceptable for a banking system to have a situation where the profits are private and the losses are socialized. That is just not a sustainable proposition. We need better regulation, and the Basel Committee has already made significant steps on capital and liquidity. We need better resolution, the type of bail-in that I've talked about. We need better deposit guarantee schemes so that they can pay out promptly. And we need better supervision, supervision that is intrusive, that is active, and forward-looking, proactive supervision. And again, we're taking steps in that direction.
Has the attitude within the banks changed?
There was certainly, prior to the crisis, there was a view proposed, in fact, by many central bankers, that we had reached a point where the business cycle had been conquered. We had something called the Great Moderation, and we could look at a very stable economy. Well, we know now that that's not the case, that the economy is a turbulent place, reverses can occur, and those banks that had the capital and liquidity strength during the crisis were able to make strategic moves that have materially improved their competitive position. And in our view, it is likely that banks, shareholders, investors will appreciate the importance of being prepared for turbulence.
Thomas Huertas, thank you very much for being with us here on INSEAD Knowledge.
Well, thank you very much.